Need Bitcoin support? The pros at Coinbase Connect are here to help. Learn about self-custody, privacy, mining, lightning payments, and much more. Simply go to coinbase.com/connect and schedule a one-on-one video call with a Bitcoin pro. Take your knowledge to the next level by connecting with a pro on coinbase.com today. Please check out episode 41 with Adam O, aka Denver Bitcoin on Twitter, episode 46 with Hodl Tarantula, or episode 49 with Alex Meister. All are pros you can connect with at coinbase.com connect today. Hello, everyone, and welcome to the show. My name is Chris Alemo, and I am an amateur investor. This podcast is my open source journal of everything I learn about investing and wealth management. I'm here to explore the key concepts, market dynamics, and investing strategies that will assist you on the path towards financial independence and financial literacy. My mission is to build us from amateurs to experts. All suggestions are my own, and I recommend that you should do your own research before taking any investment advice. See you in this week's episode. I hope you enjoy. All right, everyone. How's it going? Welcome to the show. Episode 51 of the Amateur Investors. Special episode today. I'm going to be interviewing the podcast host of the Bitcoin Matrix, Cedric Youngelman. Is that right? Cedric started the Bitcoin Matrix Bitcoin Matrix podcast back in October 4th of 2020 and has a host of guests from Alex Meister, which was just on my podcast for episode 49, as well as Aleks Svetski, Swan, Pritzker, and many other prominent Bitcoiners in the space. Cedric, thanks for coming on the show.
Yeah, man, Chris, this is awesome. I'm super excited to chat.
Me too.
This is great.
Yeah, it's always good to talk to Bitcoiners. It's interesting. There's not too many podcasters that I've talked to. I mean, I guess Alex Meister in a way with his show, but it's interesting to bring on someone that's not just a writer or works for a Bitcoin company. It's cool to bring on another Bitcoin podcaster. And I guess you kind of know what I've done, and we were kind of following very similar tracks. We started back in the middle of November of 2020. So while I have not been in Bitcoin as long, we've basically been podcasting for about the same amount of time. So with that said, I'd like to hear about your Bitcoin journey, how you got started, where your touch points were, and then ultimately what led you to starting the podcast.
Yeah, sure. Well, I started the podcast for a lot of reasons. One, probably around 2014, 2015, maybe 2016, I just started getting into podcasts. And, I just really enjoyed that art form. And I thought a little bit about like, oh, how could I do this? This would be really fun. I'd always like to get into content creation. And I didn't really think about what the format would be or what the subject matter was. And then it wasn't until years later where I kind of got some positive feedback, and people would just kind of like friends would be like, oh, you should start a podcast or something, And the more I dwelled on it, I kind of wanted to go for it with Bitcoin. I just put in so much work at that point. I wasn't sure what I might have to offer, but I thought I'd take a shot there because it was really the only subject matter that I wanted to spend 24/7 on and really, I think the rest of my life. So I kind of thought about it. And I reached out to Pierre Richard, kind of drunk one night on a DM on Twitter, and on midnight on a Saturday night, and by the next morning at 8 a.m. on Sunday, he was like, yeah, let's do it this week. And, kind of got going there quickly.
Yeah, that's awesome. I mean, I know with me, I started actually a sports podcast in 2019 because I do love sports and I love football and soccer in particular. I like baseball and hockey as well, but those are kind of my two big ones, football and soccer. But ultimately I started doing that. And then I realized I started resenting watching sports, where investing in finance, I've always had a love for. And like, I do that as my side hobby. And then doing this podcast is a lot more enjoyable, where sports, I would get annoyed with researching and I wasn't enjoying what was normally a fun pastime for me. So it's interesting how like certain topics, you love, like I do love sports still. I don't hate them. It's just, I hated doing the research for the podcast, where this, I love doing.
Right. Yeah. I mean, I do have a love-hate with sports. I really do enjoy the New York Mets and watching baseball. I find it very relaxing, especially since 9/11. But the hate part was like, I have no skin in the game here. And I don't know these people personally. And with Bitcoin, I was doing the research. And that was part of it too. I wanted to defend my research time with Bitcoin. I wanted to be able to say to my wife and kids, like, oh, I got to finish this book, or I got to finish this podcast. And I really wanted to have a reason to stand on. Other reasons there was I wanted to document my thoughts and my questions and approach or something like that for my children. I felt, even if no one listens to this podcast, even if I don't put it out, because I recorded a bunch before I even started releasing them. I was like, okay, I could just share this with my family one day, and that would be worst case scenario. And so I felt like it was a win-win for me. I had these questions and I was doing the work, and there was so much I could do with it, even if it didn't go anywhere. So
yeah, that's great. That's almost very, have you ever heard of like the last lecture about the one professor from Cornell that ended up getting, I don't know if he had Lou Gehrig's disease, but he basically had a disease where he knew he was slowly dying, and he recorded the last lecture. And at the end of it, his basic thing was, this lecture is for not any one of you guys. It's not for any one person. It's for these three kids or these three people. And it's his kids to basically document his life. Cause he had very young kids. I think he had a 5-year-old, a 2-year-old, and like an unborn child, and ultimately succumbed, I think, 9 months to a year later, which was sad, but it was a great lecture. Highly recommend.
Yeah.
Not just you look it, but it was very, very good. Talks about life and humility and, just kind of being appreciative of what you have in life. Not Bitcoin related, but it's a good one nonetheless. So I guess going back to the more Bitcoin end, what ultimately were your touch points? I know that's kind of a common thing of Bitcoiners, normally even ones that love Bitcoin now or Bitcoin maxis kind of touch it once or twice or at least 3 times before they finally, went down the rabbit hole and actually liked the asset class.
Yeah, I honestly can't, verify my first touch point because you don't remember what you disregard. I think I heard about it in around 2010 or 2011. And just that there's this really cool project and you could use, it had its own currency and you can, buy whatever you wanted in that marketplace or however that was structured or not structured. And that just sounded really cool to me, but like, I didn't think about it much more than that. Just that it was this really awesome, what seemed like technology to me at the time. And I think I heard about it again, maybe in 2013. I think maybe during the bull run or I remember I just moved to Chicago and I think it just, it sounded again like something like, wow, like maybe this seems more like something that you could invest in or speculate on. But, I have a young family and I was trying to figure out other things and I didn't have time to look at it. And again, it just poof gone. And then, but so, I can't really validate those, but I know for sure in 2017, I was on Twitter a lot and Bitcoin just kept coming up into my feed, just, plebs on Twitter. And that just kind of kept coming into my feed. Maybe I was on FinTwit or something. Maybe that's how it blended over. But just all these like what at the time felt like obnoxious truths or obnoxious wisdom kept coming into my feed and price is moving. And I don't remember how much of the tweets were about price, but now I'm drawn. And at some point in October of 2017, I'm on Coinbase or CoinMarketCap. I have no idea. And I'm looking at price run and I'm thinking that, I'm starting to realize that there's something very special here. And I don't really know what it is other than to speculate on it. And on November 2nd, 2017, I bought my first little Bitcoin. And part of that experience, which was unfortunate or maybe fortunate, but, in my mind, the place to buy was on Coinbase. I really have a lot of ill will towards Coinbase now, but so I bought on Coinbase, and when it took my money a long time to go from my bank to Coinbase with the ACH, and price had moved a lot by then, and that was the amount I had allotted, and I wasn't going to get as much Bitcoin as I thought, or even a whole Bitcoin at this point. So I looked at Ethereum and Litecoin, and figured with unit bias I could pick up a quarter of a Bitcoin instead of 3/4 of a Bitcoin and get some Litecoin and some Ethereum. And those things actually even ran a little bit further in the Q4 of 2017 than Bitcoin for me, at least from the purchase price, which was confounding. And now you're a genius. The 3 things you bought are all going up sky high, and and you have to really learn how to. I think the next, I did a lot of learning from that on. I think, I think once I got onto Coinbase, I started listening to podcasts. Probably maybe a couple months later. Really trying to understand what I own. I mean, I probably started off spending a lot of time even on Facebook, trying to do research, and that was just all noise, no signal. So that's kind of the beginning. 2018 and 2019, just really terrible bear market, but that was really great in a lot of ways because it just gave me time to learn, time to stack, and the learning gave me conviction. which made me want to stack more.
That's awesome. So ultimately, did you stack all throughout the bear market, or once it crashed, did you kind of step away from it and kind of be like hesitant in terms of buying more at least?
No,
I've made a lot of mistakes already between now and then, though, and this was not this year, obviously, the previous year in 2020. One of the mistakes being that I bought on Robinhood first, and then I went to Coinbase, and then I bought Coinbase, and then I also bought one Ethereum because, like you said, unit bias, and then I realized very quickly I just flipped that. I think I bought it around like $750. Ethereum went down a little bit to like 600 or whatever, and I was like, all right, if I can get my money back, because I think this is in a bear market, it got like basically back to like 750 or 800, and I basically just converted it immediately into Bitcoin. Obviously a taxable event, but then I kind of learned about cold card, or I bought a Ledger first, I transferred over to Ledger. Ledger kind of has been known to have other altcoins on there, so then I bought a cold card. So it's kind of been a process of learning by mistakes. I've been very fortunate not to lose any Bitcoin or misplace any sats, which I've been very happy about. But yeah, just making mistakes in terms of buying it on Robinhood and stuff, and kind of going down the journey. It's life's all about making mistakes as long as you learn from them. It's important lessons basically.
Yeah, I mean, I probably made tons of mistakes. I'm not making big mistakes. Never lost any Bitcoin or anything. Definitely a lot of learning about the technology and how to use the tech side of it. But probably, the worst mistake in Bitcoin for me, it was really shitcoining. It really, in terms of the one that my last shitcoin trade where I was like, okay, I'm going to get out of Link and get into Bitcoin, that Link would have gone up a lot more than the Bitcoin. And it's interesting because I have to reflect on that a lot, and I'm okay with it because I'm still happy with the Bitcoin that I traded for. And I think over the long run, I'm going to be more than okay. But that $500 in Link would be worth about 50, would have been at its peak, maybe about 50 grand, maybe now about 20, 25 grand. So that's half a Bitcoin I lost for about $500 in real terms. But that got me, I don't know, at the time, maybe a million Satoshis or something. And
so I mean, that's kind of one of the things that I guess you learn through Bitcoin, that it's not necessarily a trade or just a single investment. It's kind of a lifestyle and trying to get better. And like, I agree. Like, I mean, a lot of people look at it and like, they say, oh, Bitcoin's now we're hitting right above 60K or 61K. I think last time I checked today. But when you think of it, it's like, okay, yes, a smaller altcoin can definitely, 100x, 1000x or something crazy. But at the end of the day, it's we kind of see them for what they are. They're kind of scams. You can get the rug pulled out from underneath you. Even I think
they're illegal securities. Exactly. I just didn't want to hold it. I was really kind of a purist about it. I even knew I had a feeling I might lose in fiat terms and maybe even Bitcoin terms over the short term. But I wanted nothing to do with it. I couldn't sleep at night kind of holding it. It made me feel dirty. It made me feel like a rent seeker. So yeah, I cleared it off the deck. That was the last one. That was a few years ago now, 2-3 years ago. I mean, 18, 20, 24 months ago. But that was kind of the end of that. And I'm really glad about that,
Yeah, and I mean, even look at Mark Cuban. I know he's kind of fun to bring into the mix because he just had a Twitter space with Preston. I don't know if
I was in there.
I caught the last hour of it, which was cool. I mean, basically for the people listening on YouTube or viewing on YouTube or listening on the podcast, long story short, Mark Cuban was, I forget, he was criticizing, I guess, Bitcoin as something that Preston said in a Twitter response. And they kind of started going back and forth and ultimately opened up a Twitter space, or very similar to Clubhouse.
Yeah, Preston called him out. He's like, meet me after school in Twitter spaces. Let's go.
So ultimately, Mark Cuban hopped on, and I do give him a lot of props. I mean, I guess he's a billionaire, but to get on with, like, it was majority Bitcoiners and or people in the crypto space, and obviously a lot of people were more pro Bitcoin in that space, or at least a lot of people that I was there. At least
on stage, it was all Bitcoiners.
All Bitcoiners.
Yeah.
And they were kind of going back and forth. I guess it remains to be seen whether we the Bitcoiners did a good job debating him. I know there's a lot of pushback, not just on the speakers on stage. I thought they put out very thought out arguments, but Mark is kind of looking at it more as when you have all that fiat Bitcoin or billionaire wealth, you're just trying to look more diversification to protect your wealth, more so to then grow your wealth. I think Mark does have Bitcoin. I know he jokes about Doge.
He said he had Bitcoin. He said on the show that it's the greatest store of value ever. That's why he held some. It just seemed like, to what you were saying, he wants to diversify. He looks for alpha. I do think he likes to play inside quintillionaire games and where he can market things. And he talked a lot about, the brownie and not the recipe. And he kept referring to Bitcoin as only the recipe, and people don't care. And I think number go up technology is the brownie and the recipe. So I thought he kind of was using, he used a lot of foils. He would say, well, Bitcoin has competitors. And then he would name a competitor that, in his mind, a competitor. And then for instance, he would say Solana. And then, they would make the point that Solana just went offline for like 6 hours and they had to figure it out in a Discord room with the developers. And he's just like, okay, well, Solana's a bad example. So we never had really good examples to back up his points. It looked like he was just using buzzwords and sort of like VC talk to defend his points. He was talking a lot about AI doing 20x over the next, period of time to outdo inflation. And I thought that was a really interesting point what Rob Hamilton made during the talk, was that those forces don't have to be opposing to each other.
Yeah, exactly.
Right. We can have deflation and sound money going in the same direction, and instead of going against each other. And it was a very interesting conversation. I gave Mark a lot of credit for coming in the room, but at the same time, I think he sees it as just being a gladiator and exposure. And I think he got a kick out of 15,000 people being in the room and listening to him. I think he saw it as like Shark Tank. It wasn't, and I think all the Bitcoiners, I think, made a lot of good points. I think having multiple people debate him at once kind of took away from maybe the focused dialogue between two people. So I think it should have just been Preston and Mark.
Yeah, I think so. And maybe one other person, maybe
to moderate.
Or
yep.
I guess maybe Palm kind of brought in a bunch of people, or I'm not sure who it was. But yeah, I think it would have been better between Preston and Mark personally. I agree with that sentiment. And I agree with what you said. I mean, it's interesting that, Mark's obviously an accredited investor. For those that don't know, it's either you have to have over a 2 million net worth or make 200,000 over the last 2 years. But so he was lately, within the last year or so, is like, oh, I've got a little bit of this, all these different things. But then he's one of the ones to get the rug pulled out from underneath him. So not saying, I guess it goes back to Bitcoin's ethos. So do your own research, don't trust, verify. Where this billionaire who we think, in terms of fiat would be like, oh, a genius. He's a great investor. He understands business, all businesses. And, we see him on Shark Tank, doing all these deals. And obviously he has many more busts or many more hits than busts. But at the end of the day, if he's still getting rug pulled, it's like, how well does he know this industry that Bitcoiners have dedicated, maybe a lot more time than just Mark, or Mark dedicated time to crypto in general, but not the nuance of every single one of the investments. He's kind of more just using a shotgun approach and putting a little bit of money in everything.
Yeah, so I agree. Because I don't think he really does a lot of deep work anywhere. I do think he got lucky with broadcast.com selling that to Yahoo. I don't think that really panned out for Yahoo. I think he's able to just throw a lot of money in a lot of different places and hope for some big wins, and that makes him look like a genius. I think when he's on a place like Shark Tank or something, he's edited out. I think that's what we all saw in that long form conversation.
I would agree. And don't get me wrong, he's definitely busy. I mean, he owns the Dallas Mavericks. I mean, that's an 82 game season. So, and he obviously does all these other businesses. So don't get me wrong. I mean, while we're calling him out that he hasn't done enough research, I don't think it's us being mean. It's, he's quite a busy dude. So for him to find more time to do research on it will come over time. It's just,
it could come with focus too.
That's true.
It could come with focus. I think he's probably spread out quite a bit. I think he likes to have the hustle and bustle. I have no idea. And I think that's what came away with that. I think it was an interesting debate. It was fun. I felt like I lost a bunch of brain cells though. And I'm just never going to have to listen to Mark Cuban again.
Yeah.
I'm able to write him off now. And I think that's the brilliance of that technology of spaces where we can kind of interact with someone like Mark Cuban and get to know that or his perspective in a longer form. And quite honestly, it was disappointing, to be honest. So I think that it was great. It was awesome. And I'll probably do less of them going forward because I'll have less hopes for someone. Yeah, but.
And even like, just look at someone like Elon. Like, I know Elon's kind of more of a troll-esque on Twitter, and not to give Elon props, but it's kind of like, look at what they do, not with what they say. So while he bought, I guess, 1.5 billion at a $38,000 Bitcoin price, I think last, or is this in January or February, I guess, of this year? Time goes so fast, it's hard to keep track. But he ended up buying, I guess, starting in November, December of last year, and then ultimately announced it in January. And then, a few months later said, oh, we were testing the liquidity of Bitcoin and it was good and we sold 10%, but, we hold the rest in our...
that was an accounting trick.
Yeah, it definitely was. I think a lot of Bitcoiners agree that they wanted to prop up their stocks at the end to make it look like they had positive revenue, which, he's running a business as well. But ultimately, his investment in that is now up. I know someone was saying probably like 69% or 67% on what they originally invested. So, I mean, obviously they've done quite well with that.
Yeah, and more real returns on that than they ever have from cars.
Exactly.
Without the subsidies. Yeah, and both of them. I mean, Preston, I thought that was amazing that Preston called Mark Cuban out on the Doge or Dogecoin, whatever you want to call it, for going on Ellen and talking that stuff. And, he's really messing with people's lives and their savings. their time and their value and their wealth and their energy. And he plays it as a game. He defended it as well. Dogecoin is fun. It's got a nice community. It's got a fun community. It's got memes. You can put $25 in Robinhood, and if you lose it, no big deal. No one expects to make money on that. And the counter was like, what do you mean? If they're having fun, the only way they're gonna have fun is if it goes up in value.
Yeah, and even to be so disingenuous, obviously he's not saying his position size. Obviously, people figured out, or he announced it officially, I guess, because he's an accredited investor and inside trader, basically, because he's a CEO of a company. But when they said he tripled his position, he has $500. Now he has $1,500. Like when someone's hearing a billionaire talk about it, $1,500 is what he could throw on, as a tip for a restaurant every time he goes out to eat. That's not what you, me, and the normal person can do. So, when you really adjust for his position size relative to his net worth, that's like, a stupid gambling bet. That's like, just money he's throwing away. So don't, like I said, see what they do, not what they say, basically.
I agree 100%.
So I guess going next now, there's been a lot of news with Bitcoin. It always seems that it's, every week feels like months. I feel like I'm aging already by doing this podcast and stuff, but obviously there is talk, or not already talk, but the SEC approved the Valkyrie Etf, which is a futures contract Bitcoin ETF that will actually launch tomorrow. So tomorrow, as of recording this, is October 19th in 2021. So what are your thoughts on that? I know I have my opinions. I'd rather hold spot Bitcoin, but I guess what are your thoughts in terms of the broader global macro scheme of things?
Yeah, well, I think in the macro scheme of things, I think it's fantastic. Whether it affects positively or negatively the effect on Bitcoin, I think it's great. People can speculate on it. I think it's a more traditional vehicle designed for more traditional legacy investors. Possibility could have more liquidity come in. It's interesting, the interplay with Grayscale, and you see the discount there being drained or increasing today. I think even a spot ETF, I think, would be quote unquote better for Bitcoin in the short term. But long term, I don't think these things really matter. Bitcoin doesn't care. I'm not sure. I just think that it's a sign of the market maturing. And, I hate to talk about the market because I think it's just more, I think of markets or investing more as time in a market or time in an asset. So I'm not, I don't think of this as like buy the rumor or sell the news or anything like that. But, to just talk about it, I think it's a great development. And some people are saying that this could be a sort of landmark development where, a ridiculous amount of money could come into these vehicles. Because a lot of Roth money, 401k money, it's just not going to be able to come into even GBTC at this moment. So it opens up a different avenue. And then you have the other side of the coin. Like I remember in 2017, I think it was the CME did options. And that was sort of like what a lot of people attributed the beginning of the bear market for Bitcoin was when the CME, options came out. And so, maybe it's an opportunity for, derivatives and non sort of really linked assets to be, gaming the spot price. Who knows? I'd love to hear your opinions.
Yeah, so I read a great article. I don't know if it wasn't Heavily Armed Clown, but it was someone. They're basically describing that, all news is good for Bitcoin, basically. But basically they said, since it's a futures contract ETF, it's basically you're buying a contract to say in 6 months time or 3 months time, I forget what the wording was, that you will buy Bitcoin at the price that you basically bought in at. So if it's higher than that, you could sell the contract at the difference. If it's lower than that, you're basically eating a loss. And I'm not quite sure all the logistics of it, but basically said there's 4 outcomes. It's you buy it. Let's just say you're an investor into the Valkyrie ETF. So you either buy it, you wait the 6 month allotted time that I think the holding period has to be. It's above the value, you sell it, and basically you get the capital gains on that and you make fiat dollars. Mm-hmm. There's the hedge fund end that you can buy it, short it, buy spot Bitcoin. So basically what you're doing is you're buying Bitcoin at the current price, you're buying the contract and shorting it. If the price goes up, you have to sell your Bitcoin. You basically sell your Bitcoin spot and then you sell the contract at the premium. The reverse is you buy it long, but then is it short the spot? I forget what the last one is. And then I think the other one was just like, don't deal with this, buy Bitcoin spot. So I forget, those were the 4 scenarios. Ultimately, he said, we're not going to know what the price action is. It could go crazy up tomorrow. It could go crazy down because hedge fund shorting it. So institutional money versus retail investors, we really don't know how it's going to pan out. Some of them might try and do a combination of both, because while they're buying spot, but shorting the futures, you're not sure how the price action should, in theory, meet at a spot. For at least a limited amount of time while that's going on. So I'm not sure how it's going to go.
Is this locking up real? They're not settling in real Bitcoin.
So, that's what it is. It's not real. It's not a spot Bitcoin. It's cash settled.
Right.
So,
it's all cash settled.
Yeah, but I guess you would think if the hedge fund want to secure it, they would go to Coinbase most likely because they're the biggest provider, and they would buy spot from that as protection and basically it's the contango trade that American HODL and both Preston have talked about before.
Yeah, I agree. I think it could go in both directions. I don't really have a bet on it as far as tomorrow or any of these ones that roll out. I just think it's just inevitable that these things just keep coming. But it's very interesting this summer with El Salvador. I mean, I would have thought that would have been very positive news, and at no point did that sort of like make and it's very different dynamics there, because we're not talking about legacy markets and a lot of money coming in, but that in terms of news or just different events, that didn't cause a price increase or anything like that. Or even when Michael Saylor came out, very early saying he's buying or he had been buying it, he was able to do it without price really going up, and then a lot of times price went down. Yeah. So it's been a very interesting year from that perspective.
Yeah, I think with everything with Bitcoin, at least with me coming in, it's very much game theory. And I know that's a lot of talk in the Bitcoin community, especially among Bitcoin maxis. Obviously, while other people are succeeding, in the game of business, it's very cutthroat. And, I know everyone's like, oh, you work together, we build communities, nations, trying to work together to build better businesses. But at the end of the day, you would like nothing else than to beat your competitors. And I know a lot of times, especially the ones that have done very well, are like, oh, you can build the best business without knocking other buildings down. I could build the tallest skyscraper without knocking other buildings down. But there have been very shady things done in the land of business to maybe not knock them down, but to take out a retaining wall might be an example of that. So I think with Bitcoin, obviously there's people like us that want to see it succeed. We think it can succeed. We think there's reasons why, based on the supply, based on the halving events, based on the freedom that it offers. There's a lot of different nuances or analogies that we can bring to it. But I think a lot of times, there's definitely businesses that, banks or Western unions, that they are financially incentivized for Bitcoin not to succeed. Already look at El Salvador. They're going to lose close to $400 million or $300 million from just El Salvador alone. If you don't think that woke up a lot of their neighbors in South and Central America, I mean, you and I both know Panama's looking at it. I think Paraguay's looking at it. Brazil's looking at it. Argentina would be a great candidate for it. So there's a lot of countries that would be incentivized that if they have people working in the United States, particularly young or immigrants into the States that are sending money back to their families in those countries, they could put Western Union out of business. And I don't know if you want to expand on that.
Yeah, I mean, just right off the top of my head, I can't get over how quiet the news has been on Western Union, or just how quiet Western Union has been on these developments. It's really been a very strange time, just in terms of the news or business news. You would think that there would be commentary on the impact on Western Union's business. I have not seen a lot of that playing out. I mean, as these other countries talk about it, you'd start multiplying these numbers. And it's quite fascinating. And I think that, while Bitcoin is this, sort of IQ test or this A/B test in the world, and it's kind of obvious once you see it, it's just fascinating. And I don't know how much of it is driven by the interests against it. I mean, you just, rattled off a whole bunch of interests against Bitcoin. And maybe that's why those controlling those interests don't speak about it. To me, it's fascinating. I mean, and it's coming like a tsunami, though.
Yeah, I agree. And I think when you just look at a lot of the legacy people, I mean, aside from Ray Dalio and a lot of the hedge fund managers, Stanley Druckenmiller or Paul Tudor Jones, but when you look at the Warren Buffetts, the Charlie Mungers, the Jamie Dimons, they're very much against it. And, whether that goes against their business model, whether that goes against their ability to be quintillionaires, that's fine. At the end of the day, Bitcoin's won't help them more than it will help the people that are poor and middle class. Like, they already have more wealth than anyone can basically spend. So it's not meant to help them. At the end of the day, it's meant to hurt them at the end, or, it's for everyone. But at the end of the day, we're the ones that are trying to dethrone their power or take their power away from them in a way.
I used to look up to some of those guys like Warren Buffett and and Charlie Munger and Steve Jobs and Bill Gates. I see them very differently now. I do think there's some things I've learned from them, but I mean, I'm of the contention that Warren Buffett wouldn't be more than a mid-level hedge fund manager these days, or probably a mutual fund manager, and just middle of the road. But and I think he really just benefited from time and compounding and the American economy, and really then the money printer. Getting in as early as possible and just sponging it all up and being patient. So maybe you can give him low time preference on that.
No, I agree. And like, ultimately, I mean, he, for the last 20 years, he admits, I mean, he doesn't own a computer. He has I think a flip phone still, if I'm not mistaken. So why would Warren Buffett or Charlie Munger be good at tech? Yes, they got they were very good with Apple. And, obviously they did more of a business analytics of it. And they were kind of looking at more of units sold or widgets sold. Obviously the iPhones, the MacBooks, the iPads, the AirBuds, whatever it may be. They obviously looked at it like a business that produces widgets. But if you ask Warren Buffett to unlock an iPhone, I'm pretty sure he'd be pretty clueless as to how to do it. So, I know a lot of people, maybe not Saylor taking digs at it, but I forget, I don't know if it was Michael Saylor or I forget who it was, but they're like, you wouldn't ask your grandparents how the latest iPhone works. You'd ask, your 13-year-old daughter or your sister, your younger sister or sibling, or your new cousin that's 2 years old or whatever it is.
100%.
So I think that has a lot of play into it. I also think, I mean, I don't want to get into the conspiracy side of things, but obviously we've seen everything that's gone on with COVID and stuff, not to say that there's a narrative, but there definitely is. And I think part of that is maybe even the ones that are against it could still be stacking on the side. Well, I don't think Charlie and Warren would do that, but who's to say Jamie Dimon, when he was calling it crap in 2017, his daughter called him like the very next day and said she owned 2 Bitcoin and told her dad to stop bashing Bitcoin because she bought it. And obviously her investment was going down. So, it would be naive to say that some of these people publicly criticize it, but then
you see it in video. There's early videos of Bill Gates and Eric Schmidt talking about how valuable Bitcoin is and what an achievement it is. And then there's, later videos of them doing a 180. That's what was very interesting about Mark Cuban, because a lot of times I didn't believe that he actually believed what he would say on Twitter. And hearing him say it in that long form conversation, I can now see that I think he does believe what he says. I don't think he's well informed, but with Bill Gates and Eric Schmidt, and I think some others, they've really done a public 180, in their commentary on what Bitcoin is. And it really makes me wonder what, I really do think that, the way the incentives are is that if you have a megaphone, you can sort of influence people and you can drive sentiment. And, a lot of times, and, people go on, hedge fund managers will go on CNBC and they'll talk down a stock, and that's what they're buying. And they'll talk up a stock when they're selling it, and they're using CNBC and as a megaphone to speak to retail, and CNBC plays along, or whatever network it is.
I think there's no more perfect example of that in the obviously in March there was going to be a liquidity crisis with the world basically locking down. You can only assume you could tell a 2-year-old, what do you think is going to happen if we shut the economy down and stocks go up when things are going well and they go down when things are going bad. I think any kid looking at a graph could figure out what's going to happen next. But Bill Ackman in particular, I remember hearing on CNBC, either Fast Money or one of the shows, he was like basically in tears. He's like, there's going to be so much destruction. He's like, I was like, oh my God, this guy should get the Oscar or the Emmys. I don't even know the award ceremonies anymore because I don't listen to him. But this was a great acting thing. And obviously the market tanked, 15, 20, 25%, whatever it was. Obviously the circuit breakers of the market was going off to stop trades. But he ultimately had a short on at, what was almost the top. And he made, I think, $2.1 billion in that trade alone. Obviously, he saw it coming to an end, took off his shorts, sold his shorts at the bottom, made a ton of money, and then started buying back into the market. So not only did he get to ride it all the way down, he rode it all the way back up through the money printing in QE through the Federal Reserve. So, I mean, you don't want to say the market manipulated, but I know there's a great account called Nancy Pelosi's Twitter Nancy Pelosi's portfolio tracker.
Yeah.
And
it's great.
It's so funny. Like, I mean, they're joking, but at the same time, they're not. Like,
they're not joking.
There's a picture of her standing next to George Soros, one of the best hedge fund managers as well. He's been kind of known for the nation state attack in terms of debasing, not debasing a currency, but he did against the banks in
Bank of England,
in 1996.
He took the pound down.
Yeah, he basically took down the pound. He basically saw that there were going to be a currency collapse. So he ultimately shorted it, caused it that basically took a bunch of money, shorted it. It went down, bought at the bottom or sold at the bottom, and then bought back up all of the underlying assets that had depreciated in value with the money that he had made. So basically, he became, the kingpin, or basically the monopoly of a bunch of Banking of England stocks or real estate or whatever was on their asset side of the balance sheet. But yeah, like going with Nancy Pelosi, there was a picture of George Soros and Nancy Pelosi. It's like, there's legendary hedge fund manager, and then there's George Soros. And it's like joking that, Nancy Pelosi only makes $180,000 a year, which is a very good salary, but
right. But her husband just makes millions.
Yeah, exactly. $200 million. And who's to say she doesn't tell him, when they're about to go to bed, like, hey, by the way, we're going to do something with EV. You should maybe load up on Tesla call options. Or, hey, we're about to do a contract with, military. Lockheed's looking pretty good right now. It's all a game. And, for the longest time, people were saying, the stock market is rigged and it's going against you. And I think 2020 has kind of been a the clairvoyance for a lot of people that, maybe this game is rigged, or maybe,
it's organized crime.
It is.
Meyer Lansky said it, U.S. Steel is big. We're bigger than U.S. Steel. And I believe, in the ensuing decades, they took over corporate America.
Yeah.
And they run corporate America like gangsters.
Yeah. Jared, he's like a crime scene. He said, we're run by 4 people. It's the banksters, Big Pharma, Big Tech, and what was the last one? Banksters, Big Pharma, Big Tech, and I guess the billionaires that are basically buying off the politicians.
Right. And all those are families, actually.
Yeah, exactly. Yeah, the Rothschilds, the Vanderbilts, all those.
Whoever it is. Yeah, it's crime families.
It is. It really is. You're going to love this. So I just found out Klaus Schwab, it's kind of he is World Economic Forum. He started when he was 33. He's in his 80s now. And obviously a lot of people look and point at him as, this globalization movement. Guess who his parents are?
I want to let you say it. I just saw it. I think I'm going to say the wrong name, so I'm going to let you say it.
His mother is one of the Rothschilds.
Yeah, that's what I saw. Yeah,
exactly.
Like
so, and obviously he had a very hidden past. No one could really find his parents. And then somehow either they found, I don't know, through DNA or whatever, they're like, yeah, his mom is one of the Rothschilds, obviously. So he's, backed by the Rothschild money, the banking money. That's very hard to stop, the central banker money.
It's all right there. That's what's very interesting about the internet too, or where I don't know if you mentioned that before, but just what the internet's doing, or we have with Spaces a bit, is it is just shedding a light everywhere. I think as much as the internet is not being used for good, or has been centralized and sort of being like surveilled and used for social engineering, it is just shining a light everywhere, and you can find everything. So that those facades, if for those who are looking, are just crumbling.
Yeah.
And that just makes me, I feel like as Bitcoiners, we're living in the future, just waiting for everyone to join us. Yeah. And, maybe that future is still just us. Maybe not many people join us, but I really hope everyone joins us, and we crumble a lot of these facades and these institutions. And I think we're gonna have to rebuild them in a lot of ways. They're just not they're not working for us, and they're being used against us.
Yeah. Did you ever watch The Big Short, the movie?
Oh yeah, of course. I can't stop watching.
So I've been watching a lot of, obviously, the old classics. I rewatched the Matrix trilogy very recently, V for Vendetta recently, The Big Short, Inside Job, all those movies. And it kind of makes you sick to your stomach, especially the Inside Job and The Big Short. But remember The Big Short, when, like, exactly what you were saying earlier in the podcast, where basically no one's talking about it, but like everyone kind of is starting to see that it's happening, exactly when they were buying the credit default swaps. And obviously they saw that the housing market was starting to tank and the stock market was starting to go with it. And they said the credit default swaps, when they went to go buy, they had the weekly payments on it. They went from being about $1 million or $500,000, whatever it was. And then they jumped up to like 6 million. And basically they're like sweating. They're like, why is the price going nuts, even though the market's going the revert? Like, it's doing what we want it to do. It's going down, but yet they're saying the insurance is that much more expensive. And obviously they were trying to squeeze them out to try it, because then the value of those things was going to go up. And then ultimately they're getting calls from, Merrill Lynch, AIG, and all these different things that are trying to buy them at a discount because they know how much they're paying on basically insurance of each of those contracts. And basically they held on for dear life. And basically it was a game of chicken. Who was going to get liquidated first? Ultimately, they were able to, borrow enough liquidity or have enough assets to liquidate in order to pay for the insurance on the credit default swaps. And ultimately they ended up being the winners. And I think I love at the end of the movie, Steve Carell's character is like, he's crying. He's very upset. And he says, they're going to blame it on the immigrants. They're going to blame it on the poor middle class. the bankers and the big institutions are going to get bailed out, and ultimately the American taxpayer is going to be the one that foots the bill. And, it's kind of like hearing it. And I was in 2008, I'm a little bit younger than you, not to, say that, but a little bit younger than you. I was still in high school. I was, I think, a sophomore in high school. So I didn't really understand the global macro picture. I obviously knew things weren't well. My parents were obviously talking about it, and they're just disingenuous, but I'm like, oh, I'm in high school, it's no big deal. Life kind of goes on. But, now researching in hindsight, it's pretty crazy to see what happened. And it's disheartening. That's the only way to say it. It's disgusting, disheartening, however you want to say it.
Yeah. I mean, around that time, I worked on Wall Street. I'd worked in Silicon Valley. I just kind of seen a lot of those macro games getting played. And then I grew up, in the suburbs of New York City on Long Island. And I remember going back to my parents' house and just going on long walks. And, where I grew up, it's everything from blue collar, teachers, plumbers, to electricians, to doctors, and maybe upper middle class or middle class, whatever. But you could walk through the neighborhood and you could see that everybody's house was overvalued. Everyone was using their home as a piggy bank. Everyone was driving cars they couldn't afford. Everyone was getting extensions on their house. Everyone was going on vacations. And a lot of that was you just pick up anecdotally because you know your neighbors, you know your community. Just, you grew up with people, you know what people do for a living, and you can see how people were financing things. Everyone was just over leveraged, over financed. And
yeah.
And in the greater schemes, I think it's because they're just, I think it was more in terms of what the banks were doing and how they were sort of just, feasting on retail. But everyone was asleep at the wheel. And I think in a lot of ways, this is designed, this is by design, because the middle class always pays for it, or the poor. Yeah. And it's not so much a rich versus poor thing as much as, who has control and who has the levers of power and who's going to figure out how we're going to pay for things. And where that extraction is going to come from. And, if you're Hank Paulson and you see the economy crumbling and you have a choice of saving, middle class or your 500 friends that you go to, weddings and parties with and
the golf course,
own the same stocks and go on the yachts and all that. I mean, you're going to save, Steven Schwartzman, and you're going to save all your other buddies. And you're going to design programs to save your friends and family.
Yeah.
So, who has the levers of power is going to dictate those things.
Yeah, no, I think, I agree. And, it's disgusting. It is for what it's worth. But I think that's why Satoshi, saw the value of creating something that was outside the system. And obviously what he mined into the original block was, February or January 3rd. I think he said the chancellor begins for the second bailout or whatever. And ultimately that's mined into the very original block and put in the OPSEC of, what he put on there. So I think it was just kind of not flipping the middle finger to him, but it essentially was, while he saw what went down in 2008 and ultimately in 2009 and created what was going to become the future of money. And, I think he, based on his pronouns basically in the logs and stuff, I think it's pretty ingenious. So many of the nuance. I mean, you and me and many of the Bitcoiners can relate that, every 2016 blocks, it does a difficulty adjustment, which is the reverse of 6102, which was the order to, take gold away from citizens back in, I guess 1913 or 1917. I forget. It was when they confiscated gold. 1933, I forget what it was. His birthday was the same date as coming off the gold standard in the Federal Reserve. Every 210 blocks for the halving event. I forget what that's symbolic, but it's another thing that's very symbolic of. But yeah, it's crazy. And I think I'd love to ask the Bitcoiners, I guess, what's your favorite feature of Bitcoin that you know?
My favorite feature of Bitcoin, 21 million.
Okay.
Hard cap. No one can debase or fuck with my money.
I think that's a very important one. I would say that I guess my favorite one is the difficulty adjustment. I think that's pretty ingenious, that it's kind of like what gold's weakness was. Yeah, their strength of being a hard money and a lot of different characteristics of gold. But, I think Preston always brings it up, or someone else brings it up. If gold's price were to double tomorrow, we would be doing everything in our power to suck out every last, gold piece in the earth, or we would start flying rockets up to space to get gold out of asteroids or whatever it may be to get every last bit of gold out of everything, basically.
Yep. Yeah. So gold isn't really, it's got relative scarcity, but it's limitless in terms of what's in the universe and what we'd be able to use. And it'd be great to actually, get more gold out of the earth, or the the space or under the oceans, so that we could actually use it for its real utility and build actually better technology with the gold. It would probably get us further into space if we were actually using gold, as a conduit and for other, utility purposes.
Yeah, I completely agree.
And it's interesting. I think that, when you mentioned the difficulty adjustment, and there's so many, and you mentioned a few other there, a few others, just, I mean, the genius behind Bitcoin is unreal. And I think where I think about the hard cap, that's me taking the brownie and not going to the recipe. I'm just, just like, I want the fudge. I want this, thing that like, and I think it's a truth machine. I think it's bringing truth back to the world. I think it's bringing savings back. And it's not just bringing savings back, but it's fortifying savings. So now you have a way to save, but actually a way that you can save and no one can take it from you.
Yeah, I like to say not just savings, because when people hear savings, you obviously think in fiat terms. You think about all the debasement that's happening. It's getting your purchasing power back, or it's getting your time back. And I know a lot of people said Bitcoin's a time chain, which I would agree with as well. It's another nuanced thing. I was always back and forth between not only just the difficulty adjustment, but the halving cycle, every about 4 years, every 210 blocks, that, ultimately it gets cut in half the amount of Bitcoin rewards for the miners. So I think it also as well, another very important thing. So Cedric, thanks for coming on the podcast. Before we wrap up here, I got one more question, then I'll do my wrap up questions. But I guess I'll leave you, and you could say, respond to this however you want. But I guess, what do you think Bitcoin's doing for the world? Just whole macro gigantic environment.
Yeah, I think it's bringing savings back, and I think that reorients. Money is a language, so there's certain sort of like words that have been left out of our money or destroyed by our money. So it reorients like the way you think. So for when you can save, you can walk tall. There's a piece, Guy Swan reads it beautifully on Bitcoin Audible, Walking Tall. And when you can save, you can have confidence. You can think about your own future. You can think about generationally. You can't have you can't have multi-generational wealth without a tool to push it forward. And I think about like incentives and all the ways the world's gotten distorted and works against people who have strong morals and values and don't want to be rent seekers, and yet still want to provide for their family and want to not be in a red queen's race, just trying to keep up. For people out there who, myself included, you work a desk job or somewhere in corporate America, or, you're a spreadsheet jockey or whatever it is. And any job that's tied to sort of like an employer giving you a raise, and you get a raise of 3, 4, 5%. That's a clown world, and there's no way, you're drowning. I just remember when I was starting to raise my family and I found Bitcoin, it just all of a sudden turned all my anxiety, in a very different direction, because all of a sudden I had a tool to take care of my family and sort of like figure this stuff out and not just try to keep my head above water. Yeah. As your family grows and your expenses grows, or even your own lifestyle, if you're not in a family and you're, everything's going up in price, and you're just trying to keep up with your life, and then it goes further with these sort of like zombie jobs and zombie corporations. And I know a lot of people need that job, or you need to earn money, but like it's just so many people are working soul sucking jobs. And it's because of all these games we play on, in accounting and finance and sort of like with the books or the way companies are run, and terrible companies can raise money or get money cheap and stay in business and not have those jobs destroyed or creative destruction. And it's just, it's destroying families. It's destroying families' abilities to save and protect their wealth for themselves. So I think Bitcoin's it's doing so much, and that's on the hardship side or whatever you want to call it. But then Bitcoiners are the most optimistic people in the world right now. When I go to Bitcoin conferences, it's like a wedding. People are having fun. So you can have both. You can have a tool that can do so much for you. And then like, it's just lending optimism, it's hope, it's freedom. Really, when you get those first few Satoshis and you have the ability to, you recognize that you're not on their ledger.
Yeah.
And you can do what you want with this, and they can't touch it or they can't take it from you, or you could cross a border with as much as you can gather and no one would know. You could walk through the worst city in the world with $1 billion in your mind, and no one would know you have any money.
Yeah, I think that's perfect. And I think that's, a great explanation of it all. Like, exactly, going back to your point too, like, there's been America especially over the last 20 years, obviously more so in the last 50, but in the last 20 years, we've really hollowed out our manufacturing. We've shifted overseas. Exactly what you said. We use basically fancy accounting tricks in order to keep zombie companies alive. And when you think about the S&P 500, when you look at the S&P 500 price or the NASDAQ or whatever it is, if you really take like maybe the top 25, top 30, maybe top 50 companies, you've got Amazon, Facebook, Google, Microsoft, maybe Tesla now kind of with Bitcoin, even though they're kind of rent seeking in a way. We don't need to get down that whole rabbit hole, but basically you take the top 5 or 6 companies and they're the ones propping up the rest of the economy, or at least people's retirements. It's not, the 300th company in the S&P 500. It's not like, oh man, I need more of that stock. Or maybe, yes, someone thinks that because it's undervalued, but
it's zombie shopping.
Yeah.
For a zombie economy. Because like literally every week or every 2 weeks or every month, whenever your company contributes on your behalf, you go out there and you buy these companies at whatever price they are.
Yeah.
So imagine you went to the supermarket and you're like, okay, I need apples, I need tomatoes, I need cucumbers. Oh, the cucumbers are $50 a piece this week. Maybe I'm not going to buy cucumbers this week, but that's how your 401k is. Whatever Amazon is, I mean, they weight it, so they got to buy 5% Amazon, 6% Microsoft, whatever it is, and they're buying that on your behalf, and they're buying it at whatever price it is. So now you're forcing people to trap their money behind a tax wall because they can't take it out until they're 62 or whatever it is, and they have to buy every week or it's not deployed, and they have to buy at whatever price it is. So now, you're not shopping based on value at all. You're gearing the whole country, to shop without thinking about what they're buying and what the cost is. So it's as if you go to the supermarket and you're like, we love tomatoes. Whatever the cost it is for tomatoes, we're getting tomatoes today.
Yeah, exactly.
And that's kind of absurd. And that's just not a way to think, now, and with diversification. So yeah, if you own 100 stocks in your portfolio, it's like, that's 100 bets. Like, how many of these bets do you actually know anything about? How many of these bets do you have conviction in? And you're buying at any price.
Yeah, and especially even when you're doing the indexes, if you're doing the S&P 500, that's 500. If you're doing the Russell 2000, that's 2000. If you're doing the NASDAQ, I guess that's more consolidated. I forget that's 50 or 30, and those are, better stocks. But I love what Saylor says. He said this a lot recently. Like, what's your measure for inflation? He kept throwing around this number like 37, 39%, and I couldn't find it. I'm like, what is he talking about? Like, is he talking about used car prices? Like I was like, maybe he's averaging all these things. I really couldn't find it. And then someone's like, Chris, he's talking about the S&P 500. I was like, oh my gosh, that makes so much sense. So the S&P 500 went up 37% over the last year. And I don't know why I didn't connect the numbers, but he made a great point. He's like, yeah, you have all these hedge fund managers or all these money managers that sat in their house in the Hamptons. They were sitting on their yellow floaty, being very funny about it. And they had the best year of their investing careers. And they collected the fees from all their people that, exactly like you said, buying at whatever price. They had the best year of their career. They're sitting there thinking they're geniuses, and they really did nothing. There was a computer algorithm that was buying it. And they ultimately got to rent seek for 37% bonus on the year versus everyone else as the QE occurred, and basically off the backs of the people's 401ks and ultimately the Fed buying up everything. And, they get to take home a fat, juicy paycheck as well as probably a couple bonuses to say you did a great job through the pandemic. You kept this together. You kept the economy going, and ultimately, someone's going to be left holding the bag. And, if you don't know who the sucker in the room is, it's probably you. I think that's kind of, they say that a lot in business and poker or whatever game you're playing.
I mean, as American Hodl has said, S&P stands for Standard and Poor.
Yeah.
And if you want to be standard and poor, like, that's where you want to be.
Yeah.
And because that 39%, which sounds fantastic, is probably not outdoing inflation by that much in real terms.
No, I think if you're looking at it in terms of the expansion of the money supply, it's, if it's 25%, you basically a 12%, which would be a good year in the S&P 500. If you're equating it a little bit higher because we expanded it more than that, or if I know they expanded the M2 money supply chart, so if you're assuming it's 25 to 35%, you're really looking at nominal or real terms, you're looking at somewhere between, that 12 to as little as 2 to 3% real inflation. So you really beat inflation. So depends on what your measuring stick is. If you're living in your parents' basement versus if you're buying a house, which also went up. If you're buying a used car, which is up,
houses went up like 30%.
Yeah, used cars are up 41%. Which and that's how I knew. I've been saying to all my friends, it's like, how we know we're like things are bad when things that everyone historically, the last 50 years at least, a car is a bad investment because it depreciates and it goes down in value. I looked up the cost of my car. I bought it 3 years ago. I added about 40,000 miles on it over the course of these last 3 years. It's gone up in value $2,000. And someone said to me, they're like, Chris, it's like your car didn't go up in value. The dollars you have are less valuable. Yeah. That's why it went up in value. And it's a great point. But an asset that normally goes down in value is up in value. And that just shows how bad things are.
Yeah, I agree 100%.
So, Cedric, thank you for coming on. I got 3 quick questions, and then I'll let you get out of here. So it's been a pleasure having you on. I guess, what's your biggest investing or business mistake that you've made over your career?
My biggest investing or biggest mistake?
Or business mistake. Yeah, business or investing mistake.
Wow, that's a great question. I can't really cite one, to be honest. I mean, maybe buying, maybe going hard into GBTC, and then with this the way it's trended with the discount, I've lost a little bit on in Bitcoin terms.
Yeah.
So yeah, maybe that. But I really don't. I try never to trade with my prior self. I did talk a little earlier about like how I lost in Bitcoin terms or even in fiat terms on some shit coins and whatever. And I lost a lot of money on shit coins, and that was really stupid. So maybe, but I don't even see that as a big mistake, because I see that as like sort of my MBA in Bitcoin. Some people might call it an MBA in crypto, but I just don't like that word. So, that was my learning lessons. And like, I would pay that again to learn everything I learned, and I had skin in the game, and I figured things out, and so I don't see any of them as really mistakes.
Yeah. I mean, they're not mistakes if you learn from them. That's what I always say.
Yeah, I mean, I think Mark Yusko says it. It's like if something along the lines, if you win big, you learn nothing, and if you lose, then you're going to learn something.
Yeah, I like that.
And the other thing he talks about, and I really took a lot from this, is just don't cut your flowers and water your weeds. So, when you rebalance out of your winners into your losers, or, you're like, oh, yeah.
Yeah, no, sorry to cut you off there. I didn't mean to cut you off.
No.
I hate, this is just me looking at it after, this last 2 years of looking at investing. And obviously I was investing in other things, and then I kind of really came around to Bitcoin. I'm like, I don't have enough Bitcoin. It's kind of what I've come to the assumption of. But even like the Kevin O'Leary's or a lot of this, and I get, once you get to that level of net worth, they're looking just to protect their wealth. And I get that, where if you have,
that's a very different thing.
Yeah, it's a very different
Once you have
thing.
a lot of I think diversification is for protecting wealth, not creating wealth.
I agree. But I guess for me, looking at it, when a lot of people take advice from obviously the top people from CNBC or whatever, and obviously they're always talking about diversification protects yourself and all that. And that's true. But I hate when it's like, okay, my thing went up 20% and now I'm going to sell it down to 5%. It's like, but then you have to take that 15% and shove it somewhere else. And like, exactly like you said, you're cutting your flowers and watering your weeds. It's like, you don't want to hurt your winners. You want to look at your losers. Okay, why did this not go up? Should I leave it here, or should I move it into the winner? Or obviously, the winner's at a very high price. Maybe it is overvalued, but I think just, nothing should be more than 5%. No industry should be above 20 is kind of bad advice. Or maybe that was good back, around Warren Buffett's, where everything went up because of taking interest rates down. But I just don't like that advice.
I think the lesson to kind of take away from what we talked a lot about from some of the negatives of the fiat world is you do want to look for, leverage. And what I mean by leverage is not like to leverage up, but where you have control over the situation.
Yeah.
So not only is it got an asymmetric upside opportunity, but that you have some sort of inside knowledge, inside information. You understand something better than others. You're closer to someone. Maybe your cousin's opening up a bar because like he knows the mayor and he's going to get the liquor license.
Yeah.
And someone else who buys that location is not. And maybe
Yeah.
that's where you want to invest rather than just like dumping money in your 401k so that you can then go, zombie shop for, the top 5 stocks or whatever it is.
Yeah.
And yeah. So, I mean, I think it's really like kind of, yeah, I mean, you want to like think about like where you can get the leverage and the asymmetry and like learning from your mistakes. And I mean, I think I'm fortunate I've never really, made a big blunder or something like that that I could call out. But, I mean, maybe I've timed things different, wrong, or I could have smash bought, earlier or later or whatever it is. Or, I mean, or maybe held the stock from when I was like 25 years old or something. But,
Yeah.
I try not to trade my former self, only with my future self.
That's good.
And so, yeah. So,
I guess what's your favorite book, podcast, YouTube channel, or website that you like to go to learn more information about Bitcoin?
yeah, well, I mean, the Bitcoin Standard is probably my favorite book right now on sort of like economics and understanding Bitcoin. I think it's as like a graduate level book on understanding Bitcoin. I think the bullish case for Bitcoin by VJ is
I see the
a
stack of
fantastic
them behind
article.
you right there.
Yeah,
You got like 10 copies.
yeah, I'm gonna give them out to friends and family. I think that's sort of like maybe a 100 or 200 level read, or maybe a 12th grade read, and it really helped me understand the Bitcoin Standard. And that was like a really major touch point for me, not like the second touch point, but like one that really sort of like helped me understand what was happening here and give a framework to what money is, what money competes for, total asset, total, addressable market, and path dependence, and the attributes of money. So I think that's tremendous. I really bounce around. I think, Jeff Booth, Saifedean, Moose, Mark Yusko, these guys have really fantastic advice. I just sort of like shop for information, and I take it in, and I take what I like and I dump the rest. So there's no one person or one place that I go for absolute information. Podcast wise, I love the Bitcoin Matrix podcast. That's a great place. I think this podcast is great. And for website, I love going to bitbo.io, because it's just got a lot of great information about Bitcoin. I love the graphs there, and looking at the information like the difficulty adjustment and the hash rate and what we're on the block time. So
yeah. All right. Thank you once again, Cedric. If you just want someone else to find, where can they find you? Whether your website, your podcast, your Twitter account, or anything else you want to talk about?
Yeah, you can follow me at Ced Youngelman, CEDYOUNGELMAN on Twitter. And you can follow the Bitcoin Matrix podcast at De La BTC Matrix. And, that's definitely, I think, the best places to follow me. And you can find the show on iTunes and Spotify and wherever you listen to podcasts. And Chris, I can't tell you how much I've enjoyed the conversation, and I really appreciate you having me on. This has been really great.
Yeah, Cedric, it's been a pleasure having you on. Thank you so much. Thanks everyone for listening. Obviously, I'll put in the show notes all of Cedric's information, so you can find him there in the show notes on YouTube, Spotify, and all locations. Obviously, check out our website, theamateurinvestors.squarespace.com, and look forward to talking to you guys next week. Have a good one.